Good day, everyone. Thank you for joining us once again here at Sea Freedom Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to look at the different economic numbers that have come out over the past week pertaining to inflation, and then look at the Federal Reserve interest rates and see where the Fed rate is anticipated to go throughout the next year. And then we'll finish up looking at deposit rates and those. We're going to look at an average of the top 3 deposit rates per state. And so when we look at the inflation numbers that have come out, the producer price index here provides those prices for producers on their final numbers. And the final demand month over month, you can see it's been pretty volatile as we move back over the past year. But when we look at the 12-month changes, there's been some volatility, but overall it's been a consistent upward momentum. A little bit here and there at a time, but we've seen that grow from just under 2% in June of 2017 to where we are today at that 3.4% for June of 2018. And we can see that in the overall numbers here. And we can see that the expectation was that number to come in at 3.1%. So we're a little higher than anticipated in the actual number. And that's just something to think about in terms of where the Fed is, and this would support their trend of continuing to increase that Fed funds rate. When we look at the Cpi Index, now this is the consumer price index, you can see we came in for a month over month, all items at 0.1%. The consensus was 0.2, so we're a little under that consensus, but when you look at year over year, it was right on the mark, 2.9 for the year over year change ending June, and 2.9 was that consensus. That's for the all items. We see the similar occurrence in the core items, that's the all items less food and energy. And we can see that consensus at 0.2 and 2.3, which is what the actual numbers came in. So we continue to see these 2+% inflation numbers throughout the past couple of months. And we'll continue to see these most likely as we move forward, but nothing too erratic that's going to may push the Fed to increase rates faster. Overall, as we know, the Fed has said that they're going to look to increase rates 2 more times throughout the remainder of the year. And we look at the probabilities in the market, and we see that is what the probabilities are showing. No change in the August meeting, and then at the September meeting, a 25 basis point increase, and at the December meeting, a 25 basis point increase as well. So there's your 2 increases. We have to think about how that's going to play into the deposit market. We've already seen these deposit rates start to creep up in here. We saw CD rates, and we're seeing those CD specials really be more prevalent with higher interest rates, 2 to 3% between the 1-year and the 5-year rates. So we're getting fairly aggressive. But not only is it happening in the CD department, but also in those core type deposits. And right today we want to look at those savings accounts. And we went out to a website called bestcashcow.com. And this is a website similar to Bankrate, where they compile the interest rates of different banks across the United States. And then they do some averaging. So what we did is we took the 3 highest savings rates for each of the state and averaged them to come up with this map. And you can see we list out every state here, and then we put the average of the 3 highest savings rates. When we look at them individually, the 3 states that really pop out would be, the first one is that Illinois at that 3% level. Now that's an average of the 3 highest rates. And we'll talk about that in a minute and why that's at that 3% level. But then we look at New Jersey is at a 2.38 and New York at a 2.34. So we see more aggressiveness in this northeastern mid-Atlantic region. And then as we move out west, we can see in the mountainous areas and the plains, we get down to where they typically are here today, 58 basis points in Idaho and 55 basis points and 95 basis points in Montana, North Dakota at the 87 basis points. But overall, when we look at it, this 3% rate for Illinois, the highest average here, is propped up by this interesting savings account at Bridgeview Bank Group, and where they earn 5% interest. That's an APY, but notice it's only on the coin deposit. So the money that we tend to take out the coins, throw them into a jar, they're trying to get individuals to bring that money into the bank. And to do that, they provide a 5% APY on those deposits. And of course, that is only up to $5,000 in total balances. Anything greater than that is at 25 basis points. But it is an interesting little concept where it really draws the potential customer into the branch or to the website to inquire about the 5% interest rate. And then that should lead the consumer to come into the branch, and maybe an opportunity for that bank to start a relationship with that consumer, and then ultimately bring a bigger share of the wallet into the bank. So we're going to talk about the deposit rates over the next couple of weeks here. We're going to look at CD rates next week and look at some specials, and also compare that to some alternative funding such as the Federal Home Loan Bank borrowings or advances. So that's what we have for you this week. We look forward to talking to you next week. Have a great week, everyone.